Wall Street just witnessed the single largest financial event in human history. SpaceX officially went public, shattering every single stock market record on Earth by hitting a valuation over $2 trillion. It took Elon Musk 2 decades to bring his rocket company to the Nasdaq, but it took exactly 30 minutes of trading to turn him into the world's first official trillionaire. But behind the euphoric bell ringing and the media circus lies a deeply controversial and highly dangerous financial structure. SpaceX didn't just list a rocket company, they set a trap for the world's largest index funds, and the math behind it? It defies everything you were ever taught about modern capitalism. Here is how they pulled it off. Usually, an IPO is a negotiation. Investment banks spend weeks on a roadshow, testing a price range to see what the market can actually stomach. Elon Musk threw that playbook in the trash. He walked into the Nasdaq exchange with an absolute accept it or leave it fixed price of $135 a share. Critics begged the SEC to delay the listing, citing a massive, terrifying disconnect between the company's $18.6 billion revenue and its multi-trillion-dollar valuation. I mean, between the start of 2025 and early 2026, SpaceX lost over $8 billion, but the market simply did not care. When the opening bell rang, the stock was instantly 4 times oversubscribed. It opened at a staggering 150, exploded upward, and closed its first day at over $161. In less than 8 hours of trading, a cash-burning rocket company added more value to its market cap than the entire yearly GDP of major nations. But how? How does an aerospace firm command an ungodly price-to-revenue ratio of over 100 times? The answer is hidden inside the fine print of the S-1 prospectus filing. SpaceX isn't just selling rockets anymore. They are selling data infrastructure. Right before filing the paperwork for this IPO, Musk quietly executed a massive internal maneuver. He merged SpaceX with his standalone AI startup, XAI. Wall Street isn't valuing a fleet of booster rockets. They are valuing a multi-headed data monster. When you buy a share of ticker symbol SPCX, you aren't just buying Mars ambitions. You are buying Starlink's global satellite footprint, paired completely with raw computing power, including his massive Colossus data centers, and the Grok artificial intelligence model. Musk's ultimate goal? Launching 1 million specialized AI satellites to establish an orbit-based global AI data center network right in low Earth orbit. It was a masterclass in narrative shifting. He didn't just launch an aerospace stock, he launched the physical infrastructure of the next century. But here is the absolute trap. The exact mechanism that ensures this massive valuation stays afloat, regardless of how much cash the company burns. Under the brand new Nasdaq 100 methodology updates, any historic megacap IPO ranking in the top 40 largest companies completely bypasses the traditional 1-year waiting period. They are fast-tracked into the benchmark index in exactly 15 trading days. Think about what that actually means. Passive index funds, the giant automated ETFs that run your 401k, your retirement portfolio, or your basic savings accounts, are legally required by law to mirror the Nasdaq index exactly. When SpaceX officially enters that index in a few days, these multi-trillion-dollar automated funds will have no choice but to buy it. To make room for SpaceX, fund managers will be structurally forced to sell off hundreds of billions of dollars of stable giants like Apple, Microsoft, and Nvidia, just to pump that cash directly into ticker symbol SPCX. It is an unstoppable, automated capital siphon. Whether the stock is fundamentally overvalued or completely speculative becomes entirely irrelevant, because the computer algorithms that run Wall Street are now hard-coded to buy it.
Elon Musk is now sitting on a personal net worth of $1.1 trillion, a number that completely breaks human comprehension. To put that into perspective, only about 20 nations on the entire planet generate more economic output in a single year than this one man now holds in his hands. But the real story here isn't about his personal wealth. It is about a terrifying shift in the mechanics of our global financial markets. When public retirement funds are structurally forced to buy into an aggressive, cash-burning empire controlled entirely by one single man's voting shares, the boundary between public capital and private dynasties completely vanishes. Elon Musk didn't just build a successful rocket company. He built an architectural financial pipeline that Wall Street can no longer turn off. And if you hold a basic index fund, you just became a shareholder.